Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock. With news, markets are increasingly sceptical of Chinese policy actions to turn around their economy. But first in the US, retail sales came in 1.7% higher in September from a year ago, a far lower gain than the 4.2% year-on-year gain in the same month a year ago. But there was a good gain in September from the prior month at about the year ago annualised rate, so maybe that will have the Fed holding back from more rate cuts. And yesterday at a briefing, China's Ministry of Housing said it will expand a so-called white list of property development projects and bolster that with a 4 trillion yuan of financing to property developers through banks by the end of the year to allow them to complete stalled projects. But markets thought this was a bit lame in the circumstances, and they all moved lower, with equity markets falling 1% and yields on Chinese benchmark bonds falling too. The yuan slipped as well. Markets haven't seen the policy action they want after the bazooka expectations were started a month or so ago. And that is not saying that the market is right or that Beijing policy approach is wrong. It's just that markets are voting actions so far down with their funds flows. And China's next step will likely to be to lower their loan prime rate at its next review. And the Australian September labour market report saw jobs rise by 64,000, their best since February, and far higher than the 25,000 expected. Along with their relatively high inflation at 3.8%, this labour market strength may put the kibosh on a rate cut at the November 5th RBA rate review. Global container freight rates fell yet again last week to be 126% more than pre-pandemic levels. There's still principally outbound China cargoes that are weakening. Perhaps more telling is that bulk cargo rates were down 6.9% last week from the week before and are now 16% lower than year-ago levels, all on weak demand. The US Treasury 10-year yield is now just on 4.10% and up 9 basis points from yesterday. And the price of gold will start today at $2,690 an ounce, up $20 from this time yesterday and a new all-time high. But oil prices are holding lower at just under $70.50 a barrel in the US, while the international Brent price is still just on $74 a barrel. And the Kiwi dollar starts today at 60.6 US cents, unchanged from yesterday. Against the Aussie, though, we're down 40 basis points at 90.5 Australian cents. Against the euro, we've risen 30 basis points to 56 euro cents. That all means our trade-weighted index starts today at just under 69.2 and unchanged from yesterday. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.